Welcome to Bitcoin Escape Plan. Everyone expected the price to start dropping, but it's still holding strong. What does that mean for the price of Bitcoin? Well, in today's video, we're going to go over the key levels of support and resistance that confirm for us whether the price is going to continue its trajectory onward past 80K, or whether we are about to see a major failure on the charts. Later on in the video, we will go over the higher time frames just so we understand the historical context for what's going on at this stage of the market cycle. And at the end of the video, I will go over my perpetual trades, why I am still long at the moment, and what I am looking for most closely on the 4-hour chart. If you are new to the channel, go ahead and check out bitcoinescapeplan.com. Every Monday, I release an in-depth newsletter across all the time frames that matter most. That kind of gives you an accurate picture of what's going to happen with the price and a couple other goodies over there on the website. Go check it out, separate from the videos I make here on YouTube every Sunday, Monday, Wednesday, and Friday. All right, let's get into the video. So like I talked about in Friday's video, essentially what we're waiting for is confirmation of another retest of 80K. So we went as high as 79.5 and then failed down below, as well as this is a short-term a short position that you could have taken on the 4-hour time frame in particular. Not one that I would hold, like I would not have flipped perpetuals in that direction. Again, we'll talk about that at the end of the video, but very important that we did see initial resistance off of 79.5K. 80K essentially is what the price was reacting to. So if we go up here, these are the anchored VWAPs. If you don't know what that means, go ahead and check out the courses over here. But essentially, that is the volume of the price that is anchored to key levels. This one being anchored to the 126 all-time high. This one being anchored to the lows of 2011. So long, long time ago. Both telling us roughly the same thing. We should get a reaction either to the middle band of the elder VWAP or to the middle band of the downtrend anchored VWAP. That, for me, is what I'm looking for as a signal to potentially close my perpetual longs. Again, we'll talk about that later on in the video. But in the short term, we did see a break of the 4-hour SMA to the downside. I believe this was Friday evening. And price did end up holding strong at 77.2K Fibonacci pivot over the course of Saturday. I was like really spending a little bit of time on Saturday trying to decide, have I already made enough profit on this trade where it makes more sense for me to look for a new setup versus trying to squeeze the last little bit out of the trade. And I decided to remain long, but mostly because I saw strength at the 77.2K pivot. And we are now seeing compression on the Bollinger Bands, which means we're going to see a snap to one side or the other very soon. And while that has been an uptrend, doesn't mean that it's always going to be an uptrend. So I think what we're going to need to see initially, so the 4-hour SMA itself is 77.8K. As you can see, as of time of recording right now, we are back above it. We've been kind of flat though. Like we made a rise as high as, what's that say, is 78.2. The candle closing at 78.1, so just barely above 78K. And again, like I've talked about in other videos, we're going to continue to see just a basic stratification of prices. So 76, 78, 80, 82, like it's going to be fairly predictable where the price needs to have an actual reaction. It's just because the numbers are getting to the point where they're simpler. It's why sometimes, like, I understand why people say that Bitcoin is boring and they're looking for something that's more exciting. But when you trade 10x leverage contracts, you do not need it to be exciting. Like, you need it to be consistent. So what we're looking for at the moment is continued strength above the 4-hour SMA. At the moment, again, it is okay. It's not terrible. We got about 2 hours left in this 4-hour candle. We have not really seen volume return since Wednesday of last week. So it kind of just depends if we see like some major news story come out that's going to flip the market one direction or the other. But I'm not really worried about it as long as we stay above that 77.2K pivot. But again, we are seeing compression. So we will probably see a snap to one side or the other very soon. My bias is still towards the upside, but not for much longer. And again, there's no guarantee that we're going to get a reaction off of these anchored VWAP levels. It just is like, that's a pretty clear trend from the bottom one over here up towards the middle. I don't necessarily, again, expect that we go all the way to 83.5, but I think 80 is likely. Not guaranteed, but very likely. So I'm going to be paying attention if we get an upside reaction out of this Bollinger Band squeeze that pushes us to the upside. We're going to want to see strength at 79, a break of 80, and then 80.2 is super, super important. If we have a strong reaction to that to the downside, it will be something to pay very close attention to. Not sure if it'll be enough for me to actually close the position or not, but we're basically waiting for either confirmation of a strong bounce off of that level or a continuation above that level. And then we just want to look at 82K and 83.5K, which brings us to the historical context for what we're looking for. I've talked about this in pretty much every video in recent memory. What we are expecting is, this is the monthly SMA. Now, we do not have a historical precedent for multiple green candles in a row on a bear market year. It's not normal. We have 2 here. This is the next year. We have 1 here. Yeah, like we don't have a lot of historical precedent for multiple green candles in a row. We have 2 historical precedents for there being 2 green months in a row for bear market years. Doesn't mean it's always going to be that way, but what you have to acknowledge is the most likely probability is we've got a pretty flat candle here and a very strong one in the month of April. So what that would most likely indicate to us is that May is going to have to retrace. Now, that does not mean that it has to retrace all the way below over here, but it does mean that it's more likely that we're going to see pressure back on that 76.2K pivot, not as support as it is currently registering on the chart, but as resistance on the way back down. So that is the most likely scenario that we see, is that May will open up and we will start to see a drop to the downside. Like I've said in other videos, I don't really care if the top of this right now is April 25th or if it's May 3rd. I don't care. That's in general the shape that we would expect to see, which we can see a little bit more clearly on the weekly time frame. So on the weekly time frame, what we historically would expect during this time of the year is a failure of the weekly SMA. The weekly SMA itself currently sitting at about 77K, just above that 76.2K pivot. And I do expect, regardless of where this candle closes this week, even though we are currently above that level, the most likely outcome is that the weekly SMA itself is going to get pulled either directly to the 76.2K pivot or below it. Now, there's a possibility that we start to see it round at it, but I don't think that's the most likely scenario. It's more likely that it'll kind of like slow its descent and then maybe it starts curving. The weekly does like structurally look different than the monthly. The monthly at the moment is still curved upward and still heading higher. That was not the case in 2022. In 2022, it's heading higher until roughly May, and then it starts to round out and head lower. So it's still possible that that is what we are seeing. However, I actually think it's more similar to 2018. Who was the president in 2018? Oh, was it Donald J. Trump? Yes, it was. So what we saw in that instance was a steady rise that entire time. Now, we do not look like this. We had a sharp uptick. We have a little bit more volatility. We had one of these guys, but earlier on. But that was the case, was we didn't actually have the price going back. Well, it stayed below the weekly SMA, but it did not have like a sharp impact on the shape of the weekly SMA itself. Whereas now we are steadily rising still. The Bollinger Band itself on the bottom is also steadily rising. So historically speaking, what we would expect for the closest likely interaction with the monthly SMA is a period of about 8 to 12 months. This is closer to 12 or 13. This one was closer to 8. So those are the historical precedents that we have. That's what we got to go by as like our baseline precedent. So we are currently on month 5 of that, which means that we have a minimum of 3 more months, or a rough estimate of another 7 months before we have an interaction with it. Now, there's a number of things that are going to you know, expedite that process or kind of make that process inevitable. I think the Fed chair change, Jerome Powell being out next month and Kevin Warsh going in. Kevin Warsh is supposedly bullish on crypto. I watched an interesting video today where someone was talking about how it's very likely that we're just seeing basically them redacting the previous chair's work in order to facilitate the right to like print a shitload of money. So for me, it's just going to depend on when exactly we start to see that. And it's my understanding that we will probably see that because of some failure of the treasury bill supply, which I have to imagine is a negative impact on the price short term. Is it a long-term logical imperative for the price of Bitcoin to continue to go up as long as they continue to print dollars? Yes, that's the point. That's why I take my free time to make a channel about it. It's because that's what it is functionally designed to do, is to continue to suck up that liquidity. However, it's still going to react negatively in periods of significant stress. So there's a high likelihood that there's going to be some type of news story or event that precipitates that actually makes price go down instead of going up initially. We may, again, my like baseline assumption is that we're going to see a lower high formed basically between now and the second week of May. Essentially, we'll have confirmation whether I'm right or wrong about that. But the next one I would assume also is July. But I'm just not anticipating a future where we see another retest of 96 be sustained. So technically I have talked about a retest of 96 as early as December videos. I kind of don't believe that anymore. I'm still open to it. There are people that I watch that have way more money than I do they're also talking about that, about a rise to 100 or above. For me, it's really the reaction to 80 is all that actually matters, and the highest I can really believe is like 86 is like the highest I can believe here before, again, we're gonna get pulled back below the weekly SMA. I don't really care if we're above it for 3 weeks. We have historical precedent for that. Over here, we got above it, and then we failed the Fibonacci pivot and went back below it and stayed there for a long time. So that's still my baseline assumption. As far as I understand the stablecoin bills and the law, functionally, the banks do not actually have to implement whatever the laws are decided until January of next year, even though the law should be finalized by July. That means they still have to go get all their partnerships. They still have to announce all of those. They still have to send you stupid little flyers in the mail that you're going to throw out so that you will use more stablecoins so they can incentivize you, because the banks themselves, via their customers, have become the dominant buyers of US debt. It ain't China, it ain't Japan, it ain't Russia anymore. It is now anyone with a JP Morgan Chase or a Citi bank account that wants to have stablecoins. That's who it's shifting. That's what's happening broadly. That is why we have exposure to Bitcoin. Welcome to the class. Because of that truth, we can expect at some point the liquidity is going to make the chart explode in a way that is favorable for us, which is why we're focused on technical analysis, so we can find the best times to actually allocate instead of, panicking or being overexposed. So me personally, what I'm waiting for is confirmation of a failure of the weekly SMA. At that point, I will likely flip bearish. Now, I don't really have a reason to close my position until such a time that we have confirmation of weakness in this trend. Now, I want to be very clear. That's my perpetual trades. I don't sell my spot Bitcoin position unless it improves the quality of my life. So every once in a while, towards the end of a cycle, I will sell a little bit of my Bitcoin if it helps me, dramatically reduce other debt, or helps me get on top of other bills or whatever. If it improves the quality of my life, it is acceptable to sell a small portion of Bitcoin. It is not acceptable, just because the market is scaring me or whatever. Anytime we are below the weekly SMA, historically speaking, is a good time to DCA. Now, would I have started DCAing back in October of last year? No, I would not. I've been a part of this game long enough where I understand that historically speaking, you're going to be better rewarded after the 50% initial drop. So the 50% initial drop happens, and then there is a recovery, and then it drops harder. We are currently in the period of time where the 50% drop has happened and there is a recovery. So what I would anticipate is going to happen is it's going to drop harder next. That's what we expect. Same case over here. This is a 72% drop, recovery, drop harder. One more bounce, and then continue to drop harder. This is the baseline one that I'm assuming, by the way. I just screwed up the microphone. This is the one I'm actually assuming. So technically, we've already broken this because we've already seen a reaction of the weekly SMA. But this was the high at the end of April, early May. That dropped down and consolidated until middle of July. Another higher low was formed, and then it continued downward. And I would expect roughly the same thing. If you want to just copy and paste this chart over, this is going to be the rise until Kevin Warsh takes over for Jerome Powell, and everyone's going to think, oh, he's crypto bullish, but he's going to make a decision early on that it initially seems negative for Bitcoin, is going to not raise or not lower the interest rates quickly enough, or whatever it is. Something is going to occur that is going to be a buy the rumor, sell the news event, essentially. That the chart has already priced in that movement. It's then going to sell off. Then the crypto market bill, they're finally going to get their shit together by July when it's actually due. Not all this time, all this whole time, where there's, like, I don't know how much you guys follow news stuff. I talk about all the time how I don't care about the news, so you're not here for that. But this whole time, there's been like changes in the crypto market structure bill. Coinbase is in, Coinbase is out. They don't agree with it. The banks don't want them to be able to have a stablecoin yield, which I did see that they're like, basically Coinbase and the other companies are willing to move forward with them completely nerfing stablecoin yield, which is not good for you, the consumer of crypto products. It's a big point of being able to do it, is to be able to get basically access to a carry trade vis-a-vis you are lending one asset, typically Bitcoin or something like Bitcoin, receiving a stablecoin, and then you're either earning a larger yield on that stablecoin, or you go and use that stablecoin for your expenses instead of having to use your Bitcoin itself. So in that system, again, we want to have more of the hard asset. Like, that's what we're actually concerned with. That's kind of like separated from the market politics, which, like, for me personally, it's just hard for me to believe. This is all the ETF buyers. This is 2024. So obviously their earliest clients got it here, in January. That puts the price at about 43K. So a typical market cycle, we would expect people who bought in, not necessarily at not the actual beginning. Like, I'm not anticipating the price is ever going to go back to 15.4K ever again. That's never going to happen. However, it does need to have confirmation that the pre-halving year levels that are most predominant are support. Like, it needs confirmation that those are support. Now, again, this is probably the last cycle that is true. It may already not be true. Like, we may already not need to see that. For me, that would be as sufficient as a retest of 44K. If we get a failure of the weekly SMA here, as I would anticipate, again, between now and I would call it like the second week of May, essentially. If we start to get a negative print down that breaks us past 76.2K, we will initially probably have velocity towards 64, and then it's really just a matter of, are they able to squeeze enough liquidity out of the markets between now and July to keep us above the 64K pivot? Because if we lose the 64K pivot, we're going lower. Like, I don't know what to tell you. We're going lower. I don't think we're going to get a double bottom there that reacts super favorably for the price without already having the stablecoin liquidity, like the engine fully moving. As far as I understand, and correct me if I'm wrong in the comments down below, as far as I understand, that's January of next year, not July. So that's what I'm anticipating, is a lower high formed between now and the second week of May that results in downside momentum. At that point, I will likely flip my perpetual to a short. I'm not sure if I'm going to stay in it for a long time. I think what I'm about to be shifting with my strategy, and I can move into that now. I believe I want to start layering futures with the perpetuals. So what I've been enjoying so far about it is, one, I shorted here and then flipped it long because I'm a baby, and was wrong, and I was in loss for like 3 weeks, but I understood the broader trend of what was happening and did not panic, added to it twice, and now I'm still in really good profit. I forget exactly what it is, like 84% profit or something like that, which is great. Now, obviously, one of the primary things that I personally would like to do is take less trades with more money instead of having to like actually time every one of these swings, because it gives you variable access to different yields, which is good. I base this strategy primarily around the fact that you can get a 1 to 3% swing pretty frequently, like every couple days. Basically every like 1.5 to 3 days, it lines you up with one of those setups. Predominantly, again, I'm looking for candles that close right next to each other outside of either side of the Bollinger Band. Doesn't matter to me if it's long or short, but pretty much that's what I'm focused on personally. Is I would like to use my perpetual trades to have leveraged exposure to the trend itself. So I want to wait for confirmation of the trend itself, which again is why I'm waiting for a reaction to either of these middle band anchored VWAPs. Once I have a reaction to one or both of those middle band anchored VWAPs, it's going to be easier for me to decide, okay, you know what? I'm happy with my 110% profit, 130% profit. I'm going to go ahead and lock it in, wait a little bit, just take some scalps, and then wait essentially to like fully enter my next perpetual position. And this has just been a long learning process for me, essentially, trading specifically with Coinbase ones. I know if you're following me and you're trading from somewhere else, like you're using BitUnix, or Bybit, or you're somewhere else where you're able to trade isolated positions, then there's not really any reason why you can't just use perpetual trades on both sides and just continue to add to both your longs and your shorts. But going through the Coinbase route, you kind of have to ladder them with both the futures contracts and the perpetual trades. And I got to be honest, I'm not sure if I actually want to add that layer of complexity, or if I'm comfortable with just going slower with the perpetuals, because again, this is the only time in my trading history of all crypto stocks, meme coins, option contracts, everything that I have tried, this is the only thing ever where I was objectively wrong and I'm still in profit. Like, I have not found that with anything else. Anytime I was objectively wrong about an option entry or a meme coin timing or whatever, I never saw that money again. That money was gone forever. Even in an instance where I was correct initially and then made a poor decision and then was wrong for a period of 3 weeks, it's only cost me like $1 worth of fees. It may not even cost me that at the moment because of how perpetual funding rates work. And again, I had the conviction to be able to add to the position when I deemed it was reasonable. And I'm working within the constraints of like, there's like $1,000 in this account. I'm trying to learn from like absolute bottom of the barrel rather than, dumping in a ton of money and blowing it. And so far, that's what I'm learning, is that your perpetual trade specifically is just for leverage exposure to whatever the trend is of ideally a longer timeline. Like if you can you can see it on the weekly. I kind of don't trust it as much on the weekly, to be honest. I really like the 4-hour for entries. I just think it works the most cleanly. But if you were to look at it on the weekly time frame, and again, this is going to be different across years. This is not always going to look like this. But if you just want to use it from the basic same logic of we're looking for two candles that close next to each other on either side for a long or a short, well, it works pretty cleanly. Like those are shorts that you would have been paid very handsomely for, even if you were in a period of slight loss for a bit there. That's not quite as clear, but still would have worked. Not quite as clear, still would have worked. This is your clear one, pretty clear that is a short. I wish I knew about these contracts back then, dude. Oh my God. This whole strategy, I definitely would have been implementing more if I really... This is around the time where I was like starting to notice this pattern and like really studying it. And I was just more focused on maintaining my spot position than trying to add leverage at that point. But this is typically what we want to look for, is if you can get exposure to these little periods, let alone what you actually want is this guy. You want to wait for this guy. So kind of to zoom out from what I've been doing, which is primarily, again, for anyone who's new to the channel or just hasn't watched one of these videos to this point of the video in a while, what I'm looking for specifically is a reaction to either the top or bottom Bollinger Band, because the probability tells me that the price is going to move at least 1% at that time in almost every instance on the 4-hour chart specifically. I believe it's whatever, like 70 to 90% essentially, where it will initially move in the opposite direction, even if it does come back here. So if you had shorted here, you would have had a brief period of time where you could have actually taken that trade and remained in profit. But again, that's more than 1%. You know, you had up to almost a 3% move off of that before it went in the opposite direction. So that's really what I like them for, is when you're trading 10x leverage, you do not need to get that many 2 or 3% exposures to like dramatically increase your position size. Basically with 30% trades, you're up 90% in your money. So that happens like every 2 days, basically. So that's what the strategy is based around, is just looking for those scalps. And then sometimes you are going to catch longer exposure. And that's where it really comes into the higher time frame analysis that I do in these videos all the time. It's really like the marriage of those two things that I think makes you actually able to sit in these positions for an extended period of time, instead of like constantly having to jump out fully and then jump back in fully. Like, I don't really want to do that. And I think that's kind of the beauty of having both access to the futures trades as well as the perpetual trades, is for the most part, you're just going to sit in whatever your bias is for the exposure, as long as it continues to pay you to do so. You know, obviously if this trade started to go against me, I'm going to close it so that I can at least get some profit out of it. Like, I think I'm like $240 in profit right now. Obviously, if it starts going below $200 in profit, below $180 in profit, I'm at that time either going to have to decide, do we still have more room to run on this trend, or do I just cut my profits and chill and wait for the next very clear entry, and then slowly shift from, I think it's like a combination of, you use your scalp trades to fund your perpetual trades, but the longer that you can be in the perpetual trade, the better. Because technically speaking, you know, I didn't find out about these, I think, until like February or March, something like that. But if you had been able to take leverage exposure at 59.9, at what point would it have been appropriate to close it? Because technically we're still rising from that, you know. So it would be really nice to be able to just add to your perpetuals anytime you get a bounce down here, which again, that's going to require significant technical analysis and historical context knowledge. Now, if you've been following this channel, you know I've been pretty much calling all of this out, you know, at least like the major level moves, and just in general, kind of like the cadence and the pace of these moves. I've been pretty accurate about like understanding, okay, it's going to be by the end of February or by the end of April or whatever. Most of that is just taking the historical analysis and copying and pasting it to the modern day, pretty much. How do I make this go away? There we go. So that is, I think, one of the benefits of the perpetuals, is just being able to have long exposure to whatever is going on, which again will shift over the, oh goddamn, I did the thing again, will shift over the course of a market cycle. Like I would not want to stay long waiting for, you know, what those other influencers think is going to happen towards a 96K or 100K reaction. Like I don't understand where that money is coming from, you know, where you have a bunch of global uncertainty, where we have like instability within a bunch of economic factors. Like, I don't understand how we're magically going to get that and it's going to be sustained. Even if we do get it, I do think it's going to result in downside momentum more likely than just shooting above 128. Like, I don't know, for anybody who says that the 4-year cycle is over, like I don't see that reflected on the charts. I don't see it reflected on the charts at all. The only thing that I do see is, because we had that March 2024 all-time high earlier than we typically would. Typically, we would expect that at the end of the year, not the beginning of the year for the halving year. All that means is we have less volatility to the upside, which does mean we'll have less volatility to the downside. But I don't think to that level of a dramatic effect where this is the lowest that we're going to go. It's a 52% drop. The previous drop was like 78%, for the last cycle from top to bottom. So and the one before that I think was like 84 and like 96 before that. So it's like what that pattern would tell us is that we should expect more of like, call it a 64% drop. Do what I tell you. Go away, sticky keys. I hate you so much. Dear God. No. Oh my God. I'm so good at TradingView. Bro, I hate this tool so much. What's the point of sticky keys? 64 would be, yeah, basically right to that 44K pivot. That would be our like most generous assumption that the price is just going to be way more resilient and robust than it ever has in the past. There's a few things that make that target really appealing to me. One, it's below what most of the IBIT holders actually spent to get into their contracts. That's going to be huge because that is a bulk of the volume at the moment, is the people who bought at those levels. That is a bulk of the human beings who are price sensitive to Bitcoin. The other bulk is people who bought between about 86 and about 120. So what we need as we rise into these levels is for all of those human beings who theoretically have lower conviction than all of these human beings, we need those people to not sell in panic while gold is still ripping, while the stock market is still ripping, while the real estate market is still ripping. You need all of those people who don't even like Bitcoin enough to hold it themselves instead of holding it with IBIT or MSTR or whatever derivative, Those people have to not panic as the price is rising and take their like easier haircut rather than a full buzz cut. That's still, psychologically speaking, to me, what we're seeing happen. And then we're just waiting to see confirmation of, does this level continue to fill out? Which it is. It is a little bit. This is getting thicker here. But it's still, to be able to get past 80, you're asking all of these people who are lower conviction individuals, anyone who buys in bulk in the like post halving year is new to Bitcoin. They don't know what's going on. So those people, it's going to be really hard for them not to panic. It's not going to be logical for them to just add more at those positions unless they're just sitting on a ton of cash, which I don't know about you, but only my very rich neighbors are sitting on a ton of cash. Most people are struggling to get by, like they're concerned about the price of eggs and stuff like that. So that's what I would expect, is we're going to see a negative reaction on the weekly and monthly SMA that pulls us down lower. So with my perpetual trades, I will then probably flip my exposure to lower at that time. And then it's the same story. We're just waiting for a reaction to the 76.2K pivot and to 64K. What is our roadblock between then and there? About 70.3K is about the 50% mark of that range that we were stuck in. And it's the same story as all of these videos that I made in February, where the more pressure we have on 76, the more it's going to push us to 70.3. The more we have broken below that level, the more pressure it's going to put towards 64. The more times we touch 64, the more pressure we are going to have to go lower. So I think 44 is both going to act as support for anybody who bought in 2023, like the levels between essentially like 24K and about 32K roughly. 35K, 32, 35K. Anyone who bought in there, 44 is going to register significantly as support at that time for those buyers. Those buyers will then feel comfortable adding more. And those are our highest conviction Bitcoin buyers, is the people who buy at the very bottom of the cycle. Whereas we're going to need to flush out some of those people who bought too late last year. Some of them are going to get flushed out if we see any weakness on this weekly SMA. Now, they're not looking at it for that. They're looking at it of, oh my God, Bitcoin's going back to 100, Bitcoin's going back to 100. And when it doesn't, that's going to make them panic, most likely. Now, it is possible that we can get a significant uptick above the weekly SMA. However, this was when the president was announced, so fairly substantial. This is when the ETFs were announced and in full swing, so fairly substantial. We don't have anything like that for now, other than, again, the stablecoin bill, which even when it's passed in July, That's not when the money comes. This is when the money came. This is when the money came. This is the announcement and the release of the ETFs. This is when the money came. So for me, I think it's probably going to be the same case where we see this is the Fed chair being priced in, and then we're going to see the money flow in the opposite direction. This is the bill being priced in, and then we're going to see money flow in the opposite direction until the money actually enters the market, which, as far as I understand, is January of 2027. Maybe it's earlier, but I don't think so, as far as I understand it. So I hear some people talking about how there's going to be some event with MicroStrategy where they're forced to liquidate. I don't think so. I think that that's going to be a news story that continues to pop up, but I don't think it's actually going to have. I mean, it might psychologically have an impact on people that requires them to sell, but I don't think it functionally. I don't think that there's anything that can functionally impair the growth of Bitcoin. The U.S. military deems it as an important technological implementation for cryptography. They're not even talking about it for the money. They're talking about it for the security of the usage of it for funding. So this is not going anywhere. like once the money really comes in, that's when we can talk about, crazy high targets again. But until then, we have to assume that the 4-year cycle is a function, not a bug, a feature, not a bug. I am not someone who thinks that Bitcoin is going to radically change the world and everything is going to be different. I genuinely believe that Bitcoin was designed to fit within the existing structure. I don't think it was designed to supplant the existing structure. I think it was designed to fit very, very well within the existing structure and just to absorb the excess liquidity that gets created by this excess money printing. And that will happen at some point in the next 6 to 12 months. But I don't think that it is, tomorrow. I don't think that it is July. It's my gut instinct. I mean, they're going to have a UFC fight on the fucking lawn of the White House. That's not a joke. That's not on an Amazon television show. That's real life that was sanctioned. To me, that's a give them bread in a circus and they'll never revolt. Probably going to be a top for the stock market, I would assume, and a good time at that time to trim your positions. I don't know that to be exact. This channel is about Bitcoin, not about the stock market quite as much. But that is my baseline anticipation, is that at that point, that's going to be a logical time to start trimming your positions. And me personally with Bitcoin, again, I just don't believe in trimming your position unless it actually improves the quality of your life. Because otherwise, historical context of where we are heading with this asset class is just a reminder. Governments are buying this. They are finding ways to take this off of criminal cases instead of having to buy it. They are running nodes. They are investing in mining infrastructure. This is the one. It's not Ethereum. It's not Cardano. It's not XRP. It's Bitcoin. Bitcoin is the one that I think is most relevant. Now, some of the other ones will go up in terms of dollar value more, but this is the one. This is it. This is the one that they're going to eventually price barrels of oil in. This is the one that they're going to use as a governmental settlement layer of trade instead of having to use gold. This is the one. It's Bitcoin. It's nothing else. So the point of this channel is to help you understand the technical analysis more, basically until it don't work anymore, because there will be a period of time, I think, where it's going to be harder and harder to predict it. I do have models for what I think is going to happen into the 2030s, one of which does include a potential significant bear market event, which I don't think happens until probably the mid 2030s. And I think it would be if we see a failure of the 1 million price the first time around. Imagine that, where we're able to climb up to 180, 240 this next cycle, possibly even higher, depending on how much of that liquidity actually gets turned on right away and gets sucked up into Bitcoin. But I'm imagining the majority of that liquidity push over the next 5 to 10 years is going to be cyclical still in nature. So we see a rise up to whatever, 2029, I would assume somewhere between 200 and 400 at most. And then 2023, or 2033 rather, I think would be the first time that we actually could see a significant push towards 800,000 or higher. Everyone was saying how 2030 is when we're going to see 1 million, but I don't see that. At least again, based on the current liquidity, there will come a time where all of this previous technical analysis does not matter because just so much volume enters the market at one time. But that's going to be over the course, I think, of multiple years. It won't be expressed purely by Bitcoin. It's going to be expressed predominantly whenever the next gold changeover is, which I also believe is probably the 2030s. I probably shouldn't do this to end out the video, but whatever, I will do so. What I believe is going to happen with gold is they are waiting. This is the US. The US has a large store of gold. So what they are waiting to do is to rip the price as high as they possibly can. The last time that they revalued the price of gold in the United States Treasury was in the 70s. So what they're going to do is they're going to wait till it goes as high as they let it, which I would imagine is somewhere between 8,000 and 10,000 per ounce. Then they're going to start changing the market in the opposite direction, putting pressure on the downside. Then they're going to reprice and again, currently the dollar value of the gold that they have in the treasury is $42 an ounce. And again, it's sitting at 4,700 at the moment. So whenever they reprice that functionally means that they're going to be able to give themselves whatever that is, like 100 times, 1,000 times as much liquidity on paper, because they're going to say, oh, wow, well, the gold that we have is worth way more money, even though it's not. It's just an accounting change. Like, that's it. It's an accounting, clerical decision, essentially, that is going to allow them to completely revalue, and by that meaning devalue the dollar, but revalue essentially the purchasing power of the country itself, or the dominance power of the country itself. And the other factor of this is once that starts to really flow out, where is it going to flow? It's going to flow to Bitcoin. So Bitcoin is going to be the recipient of a large part of that gold outflow. All of that value that's been stored in gold as it's been on a historic run will eventually transfer over to Bitcoin. I just don't think that happens. Me personally, I think gold is going to rise until a minimum of 2029, 2030, roughly. And then I would expect, so based on my understanding of it, it was 1971, Nixon takes us off the gold standard. 1974, it's legal again for U.S. citizens to hold gold. And I forget if it's 46 or 44 or 76 or 74 rather, where they reprice it. Well, I think it was 74. I'm pretty sure is where they repriced it from whatever the 1920s or 30s was the last time that they had repriced it. 33, I believe. So that's what I would expect, is that we're going to see the significant rise happen, and they're going to reprice it right around whenever the end was. In that particular instance, they changed the price of it in 74 and it ran until 80. So there is an argument, I suppose, that they're going to change the price of it sooner rather than later and still allow it to continue running. That would mean that they're going to reprice it, I would assume, either this year or next year. I don't know if I believe that. Again, I think it's more likely that it continues to run first, but that will have a significant effect on Bitcoin moving forward because it's a liquidity driven asset. The liquidity has to come from somewhere. So the liquidity is going to come from money flowing out of stocks, real estate, and gold into Bitcoin. Combine that with the stablecoin narrative, where again, functionally speaking, and now this is probably changed over time, but functionally speaking, what we would typically expect is a decent portion of the funds that are in crypto, about 40 to 60% of the money that is in crypto, will end up heading back to, God, I haven't dusted off this chart in forever, good old Bitcoin dominance. About 60%, this is what we anticipate, is for it to go to oscillate basically between 40 and 60% at the moment of the money is in Bitcoin versus every other type of crypto. I don't remember if this one is excluding stablecoins or not, but we are having to assume that all of those stablecoins that they're going to print in the market, at least initially, the gut reaction is that a lot of that excess value is going to be pushed towards Bitcoin itself. Now, I think that there's going to be a lot of pressure this time around on some of that money going towards tokenized assets and stocks. So like once you can trade Nvidia and Apple 24/7 in a tokenized version of the stock, I do think that that is going to dramatically shift how much money will flow towards traditional crypto assets, because it's going to make traditional crypto assets less appealing. Same thing as like how Charles Schwab and Merrill Lynch and all of these other traditional stockbrokers had to start doing commission-free trading when Robinhood offered that. Like their hand was forced essentially. I think that's going to be the case where crypto itself is going to have to become really fascinating and innovative for the underlying assets of crypto to be the household names that everyone is familiar with. That is going to complicate the liquidity this cycle in a way that I don't think, me personally, the quote unquote altcoins that I'm going to be looking to expose myself to at the end of this year is probably either the highly functional level of layer ones. I personally don't really give a shit about buying Ethereum, like we've already seen it is not going to outperform. I only think that you should buy Ethereum if you're proficient at flipping memes and NFTs. That's the only reason why you should have it. There's a theoretical argument, I think, for Solana being a good buy. That one should recover pretty strongly. It's like an earlier Ethereum in terms of its cycle performance, essentially. So there may still be some juice in that. But I gotta be honest, I would much rather have full leveraged exposure to Bitcoin at the bottom. And that's kind of what I'm basing my whole strategy off of, is I want to be able to buy more spot when we are below the monthly or weekly SMA. Now, me personally, I want to wait until we have confirmation of that 50% bounce being rejected before I start DCAing heavily. So for me, I don't have it in my brain that I want to start DCAing until after July. Now, I may be wrong and I may miss out on all of these best case opportunities, but that's the reality of my life and my circumstances, is that I have to be kind of stingy about when I'm actually DCAing heavily versus when I'm allowing myself to have a small amount of leverage exposure. But that is my hope, is that if we go towards 44, I'm going to go perpetual long at that time, and I'm just going to pour gasoline on that fire whenever I can, essentially. Because it's hard for me to believe that the price will go below 34 to 39 as a wick below that 44K pivot. I don't see any precedent where we're going to go below 32 or 30K, essentially. We don't have historical precedent for that happening in the past. There's a possibility. Some people look at 64 and 69 as like we shouldn't have broken through that this time. I don't agree with that. I do think that we're going to get less volatile, both to the upside and to the downside, but I don't think that completely invalidates us being able to break below that just because we did in an earlier cycle not break it. So that's what we're looking for at the moment. There's a possibility we have already seen the bottom. I don't really believe it. Personally, it's hard for me to believe that we're not going to see another failure of the weekly SMA, but we'll have confirmation of that by probably the second week of May. And I will, of course, have more updates in the newsletter tomorrow when we actually see where the weekly SMA closes in relation to this. But what I would be looking for, God forbid you're actually still listening to the video, however long I've been rambling at this point, just pretty much watch for, does this candle close closer to the weekly SMA? Currently, it got a decent chunk above it. We would have to lose a little bit more than $1,000 for it to do that, but that's been pretty normal the last couple weeks. Like this weekly close, most of that happened on Sunday when the price actually dropped down. It had been significantly rising and then randomly dropped pretty hard at the last minute. At the moment, we look okay. We held strong above the 76.5K daily Fibonacci pivot. Still look pretty good. So again, my baseline assumption is that we're going to continue to see this rise until probably the first or second week of May, at which point we will get our April bullish close. And then at some point we got to start closing and trying to retest 76.2K as support versus resistance, which I believe will happen in May. All right, I'm going to stop rambling. I'll talk to you tomorrow. Have a great day.